We now have three of Europe's most prominent financial institutions to share their views, and here to introduce them is Accenture's Mauro Macchi. Over to you, Mauro.
Thanks a lot, and good morning to everybody. I'm Mauro Macchi. I lead the strategy and consulting business of Accenture in Europe, and I have the honor to moderate this panel with Gabriele Galateri di Genola, Chairman of the Board of Generali, Javier Perez-Tasso, CEO of Swift, and Kevin Wall, CEO of Barclays Europe. I would like to thank them for joining us today to share their thoughts and experience, and I'm looking forward to a great virtual discussion. Before we start, allow me 2 minutes in order to gradually introduce the topics we will be discussing on. I would like to share some reflection on the unprecedented times we are living in, which provides a very different context for our discussion today compared to what we would have had a few months ago. Firstly, this crisis possibly poses the greatest test of leadership in living memory. It has touched the lives of everyone personally and challenged the resilience of leaders to make the right decision related to their people and operations with many unknowns. So leadership will have to inject and project a whole series of new sentiments, or let's say extend some of those sentiments. So authenticity, empathy, purpose-driven, agility, anti-fragility are some of the key behaviors and concepts that we will see more focus on in the coming months. And all of this while figuring out the path forward in the context never experienced before. A second aspect I think we need to consider is the speed of acceleration of the organizational change. Change that would normally have taken 3 years happened in 3 months. This was not just a change to keep operations running, but also a response to the behavioral change and expectations of employees, citizens, and customers. People want to change the way they live and work, and this is already seen in many different studies where we surveyed that many people today want to work from home at least 3 days a week, and things like digital assistants or chatbots are set to become the norm. Personalized online recommendation will be increasingly pervasive. So although most of such new approaches will need adjustment as we are learning both the positive as well as the negative effects, many of these societal changes will generate impacts across all market industries to greater and lesser extent. Finally, what is coming next? We heard that the crisis is not over. We are entering in the post-pandemic era, and all possible macro scenario predict a significant contraction of GDP, never experienced before, much worse than the previous crisis, for sure, much more than the 2011 sovereign debt crisis. And while it seems to be seen whether the impact will be temporary or structural in nature, for most industries, the journey to reset has started. It is like pressing the Control-Alt-Delete buttons on our laptops, keyboards. And the financial service sector will have to adapt to a world where credit, risk management, cost optimization, workforce transformation, digital engagement, technology acceleration, if we think of what is happening on the cloud, will dominate as the global economy struggles into recession. And all players will need to ensure that their core business model will survive and thrive beyond this market crisis. So I look forward to hearing the perspective of our speakers today. It is a great pleasure to see a full representation of the financial service markets. We have international groups working in multiple countries with a view from banking perspective, from an insurance standpoint, from a global infrastructure and platform service provider perspective. So let's start the conversation. My first question to you all in 2 parts, but please feel free to combine your answers. Firstly, how has your organization been impacted and navigated the crisis so far? And what do you see as the biggest immediate challenges, roadblocks for companies in the financial service sector? So I will start with Kevin Wall, and then I will have transition to the next speakers. Kevin, can you share your comments?
On the one hand, there's been a sort of a radical change, a dramatic change, almost overnight, in having, in our case, globally, tens of thousands of people, moving to a working from home model. Across the globe, 70,000 of my colleagues are now working from home. That's almost 90% of our workforce. Across Europe, it's a few thousands. So as I say, on the one hand, a very dramatic transformation that I think we've all faced as organizations in terms of the sort of radical, dramatic move to working from home. On the other hand, 3 months into this, more in some cases, there is an element of BAU, and I think resilience is the key word here. I think our own business model, which is across 10 different locations in Europe, across different businesses, private banking, corporate banking, investment banking, markets, credit cards and payments, that sort of diversification has held up very well. And that's the same for the Barclays Group globally. Operationally, the technology, as we're seeing now, has been extremely robust. I think much more so than many of us would have expected. I think colleagues have been remarkably resilient, and I'm sure I'm not just talking for Barclays in Europe now, notwithstanding personal challenges, personal tragedies, personal concerns, and just the whole sort of added complexity of pressures in terms of managing, work and home if you're working from home. I think clients and customers have also shown resilience in many respects, notwithstanding, the challenges ahead. I think the markets, we heard the Executive Vice President talk about the Capital Markets Union earlier. And, the debt capital markets across Europe have played an extremely important role in the last few months in raising capital for nations, for sovereign states, for supranational agencies, and obviously, so it's that's sort of helped. And then I think supervisors and regulators have also shown resilience and flexibility, which has to be praised. Last comment from me. We're lucky in my business that my leadership team was sort of dispersed across Europe pre-crisis. And that dispersion, I think, has really worked in our favour in terms of dealing with it. And then in terms of the second part of your question, quickly, Mauro, I think, one of the biggest challenges ahead in the short term is the role that financial institutions, along with governments, along with the Commission and other EU arms, play in supporting clients and customers through the short-term challenges. Thank you.
Gabriele, your reflection on your organization, how it has been impacted and how it has navigated the crisis so far, and what do you see the immediate next steps?
Yeah, big topic. Anyway, trying to be synthetic, I think that our business model has allowed us to go rather well through the lockdown period and to guarantee the operating continuity. Basically, the increasing digitalization of our processes and products, the multi-channel distribution network, and the international diversifications have helped us to overcome this period in a quite positive way. In particular, the smart working mechanism allowed our people, up to 90% of our employees, to be operating after 1 week. So we were able, and it is very important for the insurance industry, to really be, even in a difficult moment, a lifetime partner of our customers, as we say in our purpose. And the results of the group in the period, I am referring to the first quarter, the second quarter will come out in a few weeks, were quite acceptable, and as you use the name, resilient. On an operating basis, we did something better than the previous quarter of the previous year, while on net result, we were, of course, affected by the vagaries and the volatility of the financial markets. More specifically, in the business lines, in P&C, the first quarter, was not that bad, considering also that auto were not moving around, so claims in that business were almost inexistent, even though now they're picking up, of course, after the new activity. In the life business, obviously, we were affected by reduced premiums, but particularly by the low interest rates, which in a business like ours obviously are not very interesting. Now, What are we planning to do in the near future to confront the situation? First of all, we certainly have a program of cost cutting. I mean, there is no doubt that the demand in the different markets will be lower in the future, including in our business. So we will have to be more streamlined. The second thing is that we will increase, we have done already a lot, but we will increase the digital projects and the cybersecurity programs because we need to protect absolutely the assets and the people who we care about. And the third is certainly operate even more than we've been doing in the past in the entire sustainability area. It is obvious that sustainability, call it green, call it social, call it governance, need to be accelerated. And this, to me, is a great opportunity because I always believed since many years that this is the road for the future of my country, of the continent Europe, and of the world. There's one big question that we are trying to attack now, which I think is key for most of our financial institutions. And this is how can we confront in a better way systemic risks like the one that we've just gone through. Because let's remember that these risks are happening more often. And, we were lucky that this time we had only one systemic risk. Think what would have happened if at the same time of, the coronavirus, we had a cyber attack, somewhere in the continent. I mean, these are things that we have to care about. Now, we think that in order to confront the increase in systemic risk, we have to have an ambitious solution, and it has to be obviously Europe-wide. And the best idea that now we're discussing with the national authorities and international authorities is the idea of building, like it happens in another major risk, sort of a pandemic risk pool where private and public convergence will provide the real solution. It is without any doubt that the private insurers alone or the public even alone cannot deal with risks of this kind, of this dimension, and so unexpected. So we need to build a pool to whom the private insurers will contribute. On a second layer, the reinsurers and the financial investors can contribute. And on the third level, the state and governments can insure. Of course, it's the need for a lot of technical details will be absolutely necessary. But the basic idea, in my mind, is that it has to be, as I said, Europe-wide. It has to address mainly to the small and medium enterprises, where the problem of the business interruption has been a real serious problem, to whom a lot of institutions, including insurers, have not been really prepared to deal with. And we had to address mainly at this stage risk like the pandemic. We cannot put all the risk that I also mentioned before at the same time. So this is the road on which I think we have to concentrate, because what the world shows today is that we have to think that these risks are not like, in the industry, we were thinking one every 250 years and so on. The globalization and, the technology and so on have put onto the table a much bigger risk. We have to deal with those risks. And I think that the insurance sector can do it as long as it works in a synergetic way with the public.
Thank you, Gabriele. And I'm sure some of the points you touch, we will cover a bit more later. And let's switch to Javier. Javier, we heard, after the topics of resilience, the topic of technology robustness, so being able to sustain operation clients. We talk about a new way to really think about risk as this black swan, as the COVID, we hope not, but, how to be much more prepared in case of combination of greater risk. So what is your view also from your standpoint of a global platform infrastructure for services in terms of how your organization has been impacted? What are your immediate next steps?
Okay, so thanks and thanks for the organization. So yes, I'm going to try not to be too repetitive with my colleagues here of the panel, but as it has been for businesses worldwide, this coronavirus pandemic has significantly influenced many of our activities over the past few months. The health and safety of our staff have been a key priority over this initial period, like for everybody else. And we have directed our attention first and foremost to maintaining the stability and resilience indeed. In our case, even more crucial, of our core infrastructure, because as a critical service provider, it is for the well-functioning of the whole financial ecosystem. So in terms of our work from home activities, well, it has been the norm as well for all our non-critical functions. And indeed, remote working works. We have been able to maintain high levels of productivity, which is a testament to the flexibility and professionalism of our people and those in the industry in general, I have to say. Even, by the way, board meetings have been conducted remotely, and more planning and discipline is required, but indeed, they work well. On that front, of course, as governments begin to ease restrictions for those of us that have operations globally and offices a bit all over the world, we are now in the process of progressively reopening our offices with the objective of doing so safely and at a measured pace globally, so we can ensure that we continue to manage both employee health and business continuity. On the operational front, as I said, given SWIFT's role at the center of the industry, we needed to strengthen our resilience even further and business continuity during this period. We had to have a certain number of staff, critical functions in our data centers, for example, while observing, of course, social distancing and other safety measures, which we did, and it has proven to be successful. Maybe one last point in the short-term actions that we took is that we are also mindful of the challenges of our customers, financial institutions. We have obviously one with Kevin being represented here today, and we did take some decisions to reduce the immediate burden on them, particularly related to operational upgrades, standard releases, and so forth, because clearly that was not necessarily the year to get all of those frontlined. Maybe to the second part of your question about the challenges going forward, we obviously know that the pandemic would lead to economic contraction across the world, a rapid global reduction in economic activity, which, by the way, we are seeing it as we speak with SWIFT traffic figures. As you know, there is a strong correlation between SWIFT traffic growth figures in cross-border payments and economic activity. And as most companies, of course, were considering all kind of economic recovery models, whether it is in V, W, or L, or in L shape. But regardless, the industry will have to meet the challenges of operating in a changed world, while also confronting increasingly, and has been said as well, margin pressure and competition. And for me, I think one key aspect is, and the Vice President referred to it, is that cooperation matters, infrastructure matters, and this applies, of course, to financial markets and the financial supply chain too. The response of central banks have been extraordinary, and they have been able to mitigate the worst of the COVID period. And my view on that front is that we need strong supply chains that are less susceptible to shocks, and to that end, we need to strengthen these infrastructures in an even more resilient way. Anything that is paper-based is just not good enough. In our particular case, for example, in the trade space, we have digitized letters of credit where they have been struggling. So we see this as an ongoing trend. Digitize, mutualize, and focus resources to recover.
Thank you, Javier. Of course, you put a lot of the accent on the infrastructure and the fact that we need to be further strengthened, but it has responded so well so far. Okay, let's start this second round. We have heard from the Vice President Dombrovskis that sustainability is at the heart of Europe economic recovery. He mentioned clearly, the green, another Green Deal. And the Commission has developed a sustainability taxonomy, as he mentioned, to guide investor decision-making, and new proposals are expected also to require companies to provide more transparency on the ESG. So not only environmental, but also societal and governance, the governance standpoint. So maybe let's start in this case with Gabriele, which you already touched a bit with some of your comments. I would like to hear whether you think that this crisis has accelerated the opportunity to invest in a more sustainable economy, not only in the environment, but also enabling social equality, better healthcare, better education, better housing. Or do you think companies will face challenges in trying to combine complex recovery plans with maintaining a commitment to the ESG goals? Gabriele.
Thank you, Mauro. Well, I didn't say before how I appreciate being part of this panel, but I say it now. And this question, this item in particular, is extremely important. There is no doubt in my mind, as I already mentioned, that this question of improving the sustainability activity of the different companies in the world is fundamental if we want to get into a recovery that is sustainable in the terms of being medium to long term. I say this also because we started making this kind of activity and this kind of investments since a long time. So we feel very comfortable in pushing even further what we started years and years ago. When we started with governance. We set up 2 committees, one at the board level, which I chair, another one at the management level, that monitor the development of all the sustainability activities inside the group in line with the Paris Pledge for Action, the Global Compact, the Sustainable Development Goals. And we believe very much in monitoring it in a very transparent and efficient way. So moving into our business, as you know, basically we do underwriting and we do investments. The good way to proceed, quickly is to fix numbers, to fix objectives. And we did so into our strategic plan 2021. In the investment area, for example, we plan by 2021 to have invested 4.5 billion euros into green assets, that is assets in line with the Sustainable Development Goals, to issue bonds, green bonds, and we've done recently one for 750 million, which was largely oversubscribed, to move into the underwriting with an increase by 7 to 9% yearly before 2021 in instruments, insurance instruments that have a social environmental value in order to really push into that direction, to give visibility to small and medium enterprises that are particularly capable into the sustainable activity, and therefore we establish a prize for them, to produce products that are in that line and that the client today expect, particularly in the health, in the protection area, in order to really make this statement come true. We recently also joined the Green Alliance, Green Recovery Alliance that the European Parliament has supported in order to make the recovery, as Commissioner Dombrovskis was saying, actually green. And we don't forget, the social area where we have launched a program, the Human Safety Net, in order to support the most disadvantaged part of our society. In particular, during the COVID crisis, we have allocated 100 million euros into that direction in order to support employees, agents, families, business partners. I do believe that if we want to have a better Europe, we needed to have a more sustainable Europe. And this, I appreciate enormously this green plan that Ursula von der Leyen has launched. And I also want to state that working in that direction, differently than what you maybe hinted in becoming a difficulty for companies, it is an advantage for companies in order to make the life that we have and the place where we live a better place. And if we have a better place, we have better people and better customers. And if we have better customers, people like us, investors, will invest more. So there is no difficulty. There is an enormous appreciation of the acceleration that the virus has brought with this. And I was always thinking, what could have pushed not only us, but the rest of the world to consider that, the green objectives were not just for a few political parties, but were really a necessity and not just a nice to have, as for a long time it has been.
Thank you very much for your comment on this last point of being really a necessity and not just a nice to have. So if we look at sustainability in the broader sense of responsible business, what do you see as the focus areas for your company?
Well, I have to say I've really enjoyed what Gabriele referred to. Maybe to add is that many members of the financial community who we are speaking to are defining their own corporate social responsibility strategies that are aligned with the support of the SDGs, the Sustainable Development Goals, as set by the United Nations, as we know. And they're going even a step beyond, as Gabriele was saying, and integrate them into their own business models and operations. And in our case, so do we. At SWIFT, we have a corporate social responsibility program in place since 2008, actually, that is currently being strengthened with the aim to streamline our activities going forward and to strongly align them in support of a selection of these of the 8 Sustainable Development Goals, covering, in particular in our case, climate action, societal matters, and the economy, of course, that we find fundamental and where we can see an important contribution from our side as well. But also, as we recover and rebuild, we need to put sustainability and resilience at the center of our thinking. And as technology evolves, increasingly at an even faster pace, let's face it, I mean, we know that there are a growing number of entry points as we digitalize our way of working, through which cyber criminals can access data and systems. Therefore, it is paramount that we strengthen our cyber defenses and we take them to the next level. In our case, for example, at SWIFT, it's not just SWIFT and any other, by the way, platform provider. It's not just about securing and increasing resiliency, of course, of our central infrastructure. It is securing the whole ecosystem. And we launched 4 years ago a customer security program to do precisely that, to raise the bar in terms of security for all our customers, our 11,000 customers connecting to our platform, to prevent fraud from happening, but also to strengthen their controls when the worst can happen. And the worst, of course, is that a customer is compromised. And when it is compromised, is to detect it and recover so that there is no money, in our case, for example, in our business, Kevin for sure will refer to that, there is no money extracted from the system because of the strength, not just of the endpoints, but also on the detection and recovery mechanisms when fraud occurs. So with cyber, with compliance activities around sanctions, KYC and AML, and risk controls in order, then we are in a perfectly good place to innovate. To innovate, as we like to say it, or I like to say it, to innovate responsibly, innovate with strong foundations.
Yeah, and I'm sure that Kevin will share some of the message. Maybe more generally, Kevin, do you think this commitment will make Europe a more attractive environment for investment? Maybe you can look also at the investment side. Can Europe, in your opinion, after this transition, become more attractive in terms of investment?
In terms of traction investment-wise from a European perspective, I mean, it clearly helps. It doesn't hinder, but it really complements a whole range of other initiatives that are underway that touch on the topic of attraction of Europe from an investment perspective, and indeed from a raising capital perspective. And some of that takes us back to the the Capital Markets Union topic that the Executive Vice President raised, and I know there's a panel on that tomorrow as well. But I think looking at it from a sort of company perspective, as it were, we've recently publicly committed to be a net zero bank by 2050. And we've committed to transparent targets, which I think is critical in this whole area. That there are a lot of, as the three of us know, and as you know, a lot of worthy statements made, and the transparency and the target element is in some cases missing. And so, transparent targets, concrete targets are, I think, a critical area here. And that also goes for, Europe more broadly in terms of the question you asked about attraction from an investment climate perspective. We are aligning our whole financing portfolio in due course. It won't happen overnight, to the Paris Agreement. And that's a huge body of work, but it's something we've committed to. We're working along with many other financial institutions to transition to a low carbon economy through green project financing, green bonds, as was mentioned earlier. So we need a lot of these concrete measures to drop into place. Some of them have done already, but they need to be dropping into place both at corporate level, at financial institutional level, and then obviously at the political level. And that's a critical part, I think, in terms of the attraction as far as Europe's concerned from an investment perspective.
Okay, thank you, Kevin. You put correctly the accent and the focus on the transparency and the importance of execution in the coming months. So let's, while I'm questioning whether there are some comments from the audience, but I will come back later. Let's have now our final round, probably on the most complex point. So what is next? So coming back to the observation about the broader macroeconomic challenges in Europe, the low growth, the high public debt, the low productivity, and that the current shock is going to accelerate the disruption of many industries and sectors. If we see what's happening in some sectors, like take the extreme one, the travel, but many other sectors really impacted. What are your thoughts on what is next for the financial service industry when we look at the midterm? So maybe in this round, I will ask Javier to start. And what are the changes do you think are here to stay and will drive a new business model? And again, from you, it's very interesting to hear, given you're representing this global platform and provider of high value services. So how do you see the next few years in terms of financial services business model evolutions?
Okay, well, it's clear that, and not linked necessarily to COVID. Obviously, COVID, in my opinion, I think will reinforce many of these trends. But even before that, I think there are a combination of trends impacting financial services that had already started new re-engineering of those. A combination of, I'll mention, cyber, increased regulatory compliance, but also, of course, innovation. This digitalization trend had already started a few years ago, and I think it's going to accelerate. In our case, what we're seeing, of course, is that in the whole area of international activity, transaction banking as a whole, as I said, digital trade, cross-border payments, it is completely being disrupted at the moment. The traditional ways of carrying out transactions are evolving because there are other alternatives, other channels, other means to do so. For example, you take the big tech players, the GAFAs, the Googles, Amazons, Facebook and Apples, or even in Asia, you take the Alipays and Tencents that are providing new ways through closed loops to carry these transactions. You see a lot of new business models being created, new technologies based on APIs, DLT, and beyond. And even existing players, incumbent players, massive ones, take the card networks, Visa, MasterCard, that they are expanding their remit, and they're capable to do so, and evolving into push payments, into all kinds of the vertical chain in terms of offering services to end customers. So with that in mind, my perception is that how I see this, and I'd like to hear how Kevin sees it as well, of course, is that I think the future of innovation in international transaction services, and let's take to your question, cross-border payments, to address this one, is going to be a combination of, yes, new rails, infrastructure that allows for instant transactions end-to-end, integrated into domestic systems, but combine that with the right controls, risk and controls around the areas of cyber, sanctions, KYC, AML, liquidity, and so forth. And that is essentially where we are now embarking at SWIFT. Actually, I was referring earlier that we had a virtual board. We had a board meeting earlier in the year where the board endorsed the new 2-year plan for SWIFT that is going to be based on evolving our current platform that is already providing transactions to be not just efficient and resilient, but also and secure, but also increasingly more with the speed being there, with more than half of the transactions being sent through the network, reaching end beneficiary in minutes. Now we're going to move that to the next level and make the platform across all accounts in the world. We're talking about 4 billion accounts available in the global platform today, thanks to our 11,000 financial institutions. So 4 billion accounts can be reached end-to-end in an instant, and taking friction out of the system by leveraging data analytics, leveraging all the controls that not only SWIFT, by the way, the banks and the financial ecosystem have built through many years. So for me, in the future, is that concept of not throwing the baby out with the bad water. I think there are many strong assets that we've built over the past 20, 30 years that can be leveraged and take to the next level to have this strong foundation so that customers, our financial institutions, can innovate on top of. And the likes of Barclays and others innovating with APIs, offering new new services to their customer, to all sorts of customers through the different channels. So that's, anyway, part of the future of financial services related to payments, how I see it. So very exciting. And even more, maybe last point to mention is that in the COVID period, that is going to be even more accelerated because of the need to mutualize services, to differentiate what is competition from collaboration, and areas that can be part of a mutualized activity. Companies like SWIFT as a cooperative will play a role there to help the industry leverage those.
And to this point, Javier, I think that, sorry if I come back to you, very interesting, some of the comments you were making, and given that you represent a platform, and the direction in the past couple of years was already going towards models with, shaping ecosystems, collaboration, a much more open network, and this is going to be an acceleration. So how do you see the evolution of this ecosystem, alliances, consortium, as also, as you mentioned, the big tech, the fintech are coming in? Do you see any particular point that you think is going to emerge?
Yeah, listen, it's I completely agree with that. I think there's been, and in Europe, by the way, triggered by pro-competition regulation like PSD2, the EU directive, but globally, the advent of not just, as I said, new technologies, but also open banking, the usage of APIs across the value chain has, in a sense, almost kind of disrupted the value chain. It has introduced an increasing number of players between, say, banks and their customers. So there are new ways today to serve the end customer, whether it's a consumer, SME, or a corporate, and that has indeed created the arrival of new fintechs. In parallel to that, we've seen new platforms that are very much specifically serving a purpose, whether it is take trade finance or FX, for example. I think the future is going to be based on this famous word of interoperability, making sure that each company plays a role where they bring their core strengths. We know our core strength. It is in the back end. It is at the infrastructure level. It is by making sure that we have all of these right controls in place, and expose that to the upstream, to our customers, financial institutions, banks, all this data so that they can also innovate and combine that with other platforms, whether they are their own platforms or new platforms or agreements that they have with their fintech partners. So indeed, the future is going to be the value chain is almost salami sliced, if you see. So therefore, there's going to be different players playing a role where they're bringing their core strength. But I definitely think that we need to have the fundamentals right. We cannot innovate cutting corners and creating shortcuts.
Thank you, Javier. By the way, I was thinking that this last point you made about interoperability, for sure, also from very basic things like communication platforms that we are using today. We are using so many multiple communication platforms. For sure, we will evolve into more consolidation and easy to exchange as we continue our trend in the conversation, in the virtual conversation and digitization. But definitely, for sure, on a much more complex type of transaction business, the interoperability topic is extremely important. Kevin, on this point, again, we were saying what's next, with this reflection on the broader macroeconomic challenge that we have in Europe. For a player like Barclays, a large institution, large bank, what do you see as the most acute challenges but opportunities in the markets when you look at midterm, the next 3 to 5 years?
Well, I think, Mauro, I mean, the original questions phase was around, I suppose, the sort of medium term. But I think what you've just asked me brings me back to the shorter term, because I do think that certainly for the banking sector, support of our clients and customers over the next 6 months, 12 months, 18 months, however long it may take, is where our focus has to be, and that's going to throw up, a lot of challenges. You mentioned the travel sector earlier. We lots of banks have got clients in that sector. We've got retail customers who would normally spend a lot of money on their credit cards for that sector. So, I think short term, for some very good reasons, has to be the focus of the banking sector, along with our partners and clients and customers like Generali, like SWIFT, governments, EU bodies, etc. I just think there's a lot of wood to be chopped, as it were, in the very near future. But in terms of some of the sort of slightly longer term issues, a lot of what Javier said clearly has direct application to our sector as well. Clearly, ourselves and SWIFT are sort of intertwined for all sorts of good reasons. So I think the whole digital acceleration. I mean, just look at the use of cash and how that's plummeted across the world as a result of the virus. And there may be a tick back, but it's not going to get back, I think, to the levels that it had pre-virus. And it's just one example. Colleagues, whilst we've all said over the course of the last hour or so that we've seen tremendous resilience in terms of how colleagues have adapted to this new model, and in many respects more working from home ought to sort of help resilience. I think that there's a fatigue factor kicking in in some aspects of this. I know, across Europe, we've had a lot of colleagues start to return to offices, and many of them have been very keen to do so, and we wouldn't force anyone to go who didn't want to. But I think, mental and physical well-being going forwards as a result of the lessons over the last 3 or 4 months is a critical part of what any, organization has to pay more attention to. We've talked about infrastructure more broadly in terms of the financial services sector, in terms of what Javier said. So, look, I think some of the trends that we saw happening pre this crisis have been accelerated in a sort of a heartening sense, in a good way. But I do think from a sort of slightly narrow parochial banking sector perspective across Europe, there's a lot to be done short term in terms of working through with clients, customers, government, other stakeholders, how we, do what is our basic role of supporting economies.
Very clear, Kevin. And definitely the fatigue factor is something that we hear very often talking to many of our colleagues, and it is another lesson learned, because probably nobody before would have expected remote working was creating such type of effects. And Gabriele, coming to you also on this midterm view, maybe with an angle you touched a few minutes ago, do you see a need for a greater cooperation between public and private sector on resilience and preparation for the future? You mentioned already the very pragmatic proposal regarding the pandemic fund, but how do you see again the future in the next 2-3 years for an organization like a big insurance international player, and this type of pandemic will trigger new opportunity for public and private cooperation?
Yeah. Well, thank you, Mauro, for the question. I mean, it's a very wide question for us. And I have to admit that when I joined the insurance sector some years ago, I was coming from the industry and from other businesses, and I thought that the insurance sector was rather traditional, was rather steady, little change and so on. To the contrary, I mean, the insurance sector, at least since I joined, is moving fast, as the fastest industries, and the changes that are taking place and will take place are enormous. Some of them were already in process before the crisis. The crisis, of course, identified the new needs and new actions to be needed. But being synthetic, before the crisis, even the two main trends that were affecting the insurance industry in terms of development were certainly the technology and the sustainability. I mean, from a technological point of view, the fact of using the famous big data offers to the insurance sector, who is used to utilize statistics and numbers in order to produce its product, offers, of course, an enormous opportunity to improve the service to clients and to customers. Basically, in my view, I'm not a super technician of insurance, but you will understand my point. Basically, from my point of view, we will move more and more towards prevention of risks rather than just paying the losses or the claims that damage produces. This is a great change, and we can add to our basic objective of covering losses services that will be needed by the customers in terms of health, in terms of protection, which, by the way, in terms of expectation of the future developments, are becoming elements of great development. Talking about protection and health is what the people now ask, enormously. So we would certainly move into that direction. So this was a trend even existing before the COVID, and will certainly continue. Now, out of the COVID, what do we draw? What do I draw? First of all, as I said before, the existence of risk which were not imaginable. No one could have imagined that the world would have been blocked for 3 months completely. I mean, not one country, not one continent, the world. So this kind of risk require a different confrontation. As we started in the past looking into for big catastrophes or for events that were escaping the logic of the traditional insurance world. And here is where I see that possibility of private-public cooperation, which in my opinion is absolutely natural, absolutely fundamental. I don't have that doubt or uncertainty about what the public can do that most people have. I think that private sector has good managers, good programs, good projects, good ways of dealing, but also the public, can do a very number of good things. So the idea, in certain cases where the dimension of the problem is bigger than what public or private can alone, confront, the right way is to move together. Of course, everyone has to do his own part. The state has to care more for the long-term strategy, the overall well-being of the populations. The insurer can go more specifically into persons, into companies, into specific sectors. So I think that there is a great opportunity in this moment to change some approaches that existed in the past. I am worried, I have to admit, that, as I said before, there are risks that are appearing now on the scene which were never seen before. I mentioned before, think if we had at the same time co-virus and cyber risk. I mean, what would have done the world? We have to think about those things. And this is not for one company, not for one sector, not even for one state. And certainly in the end, I would say that if I can make under two comments, I certainly felt that there was an enormous lack of coordination almost at every level. At the national level, I saw in Italy in particular, between state, region, and so on, how to tackle the problem of the virus. Then at the continental level, in Europe, everyone was going in every direction. Some states were blocking the supply of medical things to another state. And at the overall level, I'm part of the B20 and the G20 that will be taken in Saudi in October. I can tell you that the discussion even at the G20 level was why the world is going randomly around. I mean, we blocked, everyone in our country in late February. Other countries started a month after. Other countries started 2 months after. Other countries never started. The world is globalized, is interconnected. You cannot have this situation. You will never be able to tackle these problems if we don't improve coordination at all levels. And the final comment I would make, this globalization, we speak about solidarity, sustainability, and so on, but we have to think of a different way of pushing globalization, which is certainly a positive trend in the world, but as it has gone, it has created too many inequalities, and this will not be accepted by the world. So we will be confronted with bigger and bigger problems if we do not consider that equality is not a nice term as it was being green or whatever. It's a matter of fact that we have to confront. The wealth has to be spread in a different way among populations, among countries, and among continents. And at the same time, as someone of my colleagues mentioned it already, this also will bring a reason in terms of supply chains of the big multinational firms. And we cannot just look for the less cost efficient production, because if it is in China and we need it in Europe and we have a problem with China, we don't get the supplies and we're stuck. And this is something that governments will certainly do. So, don't take me as a fool, but I'm rather, positive in terms of what I see, because I see an enormous set of opportunities. I see a better understanding from the institutions, from the companies, from the people, of the importance of this aspect. And I see again the need to look at the needs of the humankind. The human person has to become again the center of all our attention. We do what it is useful to improve the quality of life of the individual person. This is particularly important in the insurance business, but my philosophy for the future will be do what is good for the people and possibly for the future generations.
Absolutely, very interesting and clear points you made about being better at prevention, being better in the cooperation, and also the last point you were making on the global picture. I take the opportunity, since we have a few minutes left, to make one question we received. Because we talk a lot about Europe, but there is a question about having an interest to hear from the panelists on how quickly the economy, in your view, is going to rebound, but especially how you see Europe doing in comparison with the other areas, the other regions of the world, and being you so much exposed as international operation. So how do you see this point? So maybe Javier, do you? Given your global perspective, how do you see? Do you see any particular situation in Europe we are addressing, or things that are happening in other regions that are resonating well, or the contrary?
Well, it's still early stages to address, even less to compare. But give you my perspective. I think it's obvious that it has taken time to the European member states to rally together and confront the pandemic at a European level instead of individually. However, we're seeing a clear shift towards collaboration and coordination in Europe. and this is a really helpful development. The challenge will be, of course, to keep the momentum in the face of events. And perhaps as its best, the European model has shown that it has been effective in shielding the economy and the population from the worst effects of the virus. Stability is always an important attribute, as we know, in managing a crisis, and particularly for an investment environment. So, of course, time will tell. But crises are a reliable spur for innovation as well. I mean, we've proven it. I mean, all of us here in the panel and many more in the industry. I mean, we have raised to the challenge in terms of function, and I think it has prompted COVID-19 has prompted a lot of fresh thinking from technology to pharma. So I do think generally that the EU is very well placed to benefit from this creativity, and of course we'll see over the next few months how this pans out.
In terms of execution. And Kevin, from your observatory, given the importance of operation at Barclays as, for example, also in North America, what is your view on Europe compared to the other regions of the world?
Well, I think, Mauro, if you sort of talk about Europe as one, and I'll come back on that in a minute. I think it's it's done a reasonable job, and the size of the support that's come from the institutions that are European, as well as support by governments, national governments, has clearly been significant. No question about that. But as I think Gabriele was sort of touching on earlier, the sort of importance of the nation state, as it were, in terms of what happened at the start of the crisis, and really where people look to, where companies look to, where individuals look to for support, help, guidance, governance. It was at that national level. So I don't think we can sort of ignore that. And clearly, some countries have seemingly done a better job than others, although I think it is still very early to sort of really give exam marks out, as it were, to governments. But look, I think Europe more broadly has actually done a reasonable job, and the fact that we're now seeing, obviously, in a number of European countries, return to office, people taking holidays. I mean, we clearly need people to behave sensibly to ensure we don't get alarming second spikes or recurrences. So I think not bad would probably be my assessment. And as I say, I think credit to a lot of the institutions, the pan-European institutions, whether it's the ECB, whether it's Commission, and so on. I think some people may think they came out of the blocks a little slow, but I think what they have done is significant, and we have to hope that obviously it plays its part now in the recovery, whatever shape or letter of the alphabet that might take.
Thank you. And taking notes, because we just want to summarize at the end. And Gabriele, the same question, the comparison Europe versus other regions. By the way, I combined, so I'll ask you immediately so you can answer. We had another question about the insurance industry. You're thinking on the evolution on how they will take more environmental, climatic risk in their policies, in the risk. So this was also this question, so you can combine in your answer.
Yeah, well, as I said before, I'm rather positive because I see that the institutions in Europe, frankly, I hope not to be disillusioned later on, but the institutions in Europe and even in Italy in the recent past have shown, after some hesitancy at the beginning, have shown a capacity to deal with the situation that I would not expect. And the intervention of the ECB and the Commission after, as I said, a start which was not particularly brilliant, but has become timely and massive. And so I think now the question is much more in terms of execution. We have had a game changer. I hope that this will last for a long time. We can really make Europe something that we've never seen before. And if you want my view, from someone that goes around the world. We are in 60 countries, so we continue going, different directions. Europe not only has an opportunity to play the role that it has never played, but it is needed in those situations. When I go around and they go in South America, North America, and the East, Europe is weighted now, so it's only up to us and to our capacity. Now it's it's the end of a story. We cannot complain, Mrs. So and so. Altogether, we are capable managers, capable human beings, and we can put Europe in the middle of the main actors of the world who need us. Europe has an experience, has an history, has a tradition, has a culture that none of the other have at the same time. The Asian maybe have, more culture and more story and so on, but they are not, as visionary in terms of human society that we have. The US on the other side is very technological, very advanced, but has no history. So personally, I really feel and I see the place for Europe. Now, we want to take it, fine. We don't want to take it, we are incapable to take it. Now it's a question of, even for the plan of Europe, they put massive things, trillions of euros. Sometimes I get confused in the numbers I have to mention. I don't know if there are millions, billions, trillions. So there is plenty of money. Are we going to be able to use it? And in Italy, I think that for the first time, they started putting together the stakeholders and start thinking on what are the priorities. I really hope that this comes true, because it's a moment when, as Italy, we can become a country that is much similar than the others than it was maybe in the past under many aspects. Now, the second question was concerning the insurance. In what terms? In what terms, Mauro, you were asking?
Well, how the insurance industry,
in terms of
was about taking to more account the environmental risk, the climate risk, and so on.
Absolutely, but look, this is part of our business. It's not
in the policy.
We are not particularly good people or particularly intelligent people. We care about risk, and so whatever goes around risk is our business. And of course, all the questions of environment, all the question of social, even the question of governance, which is more a question for every company, for us is business. If we are not able to care about, what goes on in the temperature, in the sea levels, in the earthquakes, we don't do our business. If we don't care about how the population react, geopolitical risks, riots, terrorism, and so on, we don't do our job. So it is a fantastic business. I say it with the enthusiasm of a neophyte, because I was used to other businesses much more simple, the mechanical business, in a way also the banking business. But here I really find, so many aspects that need to be cared about, and in which the insurance sector is moving. The problem is that, as we said before, the insurance sector is not able to do it alone. It needs not only the state, but often now, what also is very fascinating, needs many more other disciplines than before. Now we are hiring more data scientists than actuarians, for example. It's a totally different change, which is fascinating. We need psychologists, we need medical people, we need a lot of people able to produce the services that the persons today require, which is not just protecting the car or protecting the house. It's much wider, on top of caring about the savings. So it's a moment in which there are a lot of difficulties, there are a lot of risks, but there is a lot of opportunities also.
Thanks a lot, and it's great to close, to respect the time with this note of optimism and clearly about the opportunity that we have in front of us. Just 1 minute to close. I would like, first of all, to thank the three speakers, Gabriele Galateri for Generali, Javier Tasso for Swift, and Kevin Wall for Barclays. We've heard their views and appreciate really their authenticity, the purpose, the energy in driving their organization in the new challenges. We also heard this morning that the EU has acted to promote a recovery plan where rules on state aid and budget deficit have been adapted. And now it's a lot about execution. It's about the time to run, as we heard from the different speakers. So clearly is not anymore business as usual. It's a moment to catch these very important opportunities. The financial services companies are in the business of managing the future and rethinking their business models. At a time of crisis, it is very important that we have this opportunity to share our insights and experiences as much as possible, helping each other to mitigate and contain the impact in the broader economy. So thank you all for listening to this panel, and have a good rest of the day.
Thank you.
Thank you. Thank you.
Thanks a lot.